What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Tuesday, everybody. What is up, everyone? Happy Tuesday. We are kicking it off. We are continuing our conversation with Kaiju today about ETF. We're going to be talking about how to invest in AI like a professional. You know, right now, AI has been the biggest storyline of 2023. Everyone has basically been reaching out, being like, hey, Aaron, how do we, what's the best way to invest in AI? Everyone's been buying NVIDIA. Everyone's buying all these different stocks. Today from Kaiju, we are going to be talking to Nicholas Subryan. So Ryan Pennell is out this week, but in a way, we've got a different Ryan, Subryan, but he's not, sub in that way. So without further ado, let's go ahead and give Nicholas our very special Zinger Nation welcome. When we come back, we'll be talking some AI. We'll be talking the DIP ETF, and we'll be talking about Kaiju with Nicholas. All right, Nicholas, how are you doing today on this Tuesday?
Hey, Aaron, great. That was a nice setup. I like that. Pleased to meet you. I'm excited to be here. Yeah, I'm doing fantastic. Thanks. It's raining here. We've got a bit of a tropical wave passing through, so it's hurricane season. Every 10 days, this sort of get a bit of a weather passing through, and typically doesn't turn into anything, but. Today is just rainy and overcast. But
where are you joining us from?
So I'm in Barbados.
Okay.
I spend out here, but between here and Europe is typically where I am. Yeah.
Nice. So yeah, we got some people in the chat. Looks like they're joining from Florida, so they might know a little bit about the rain. We're here in downtown Detroit. It's super sunny out, which is why it's kind of like backlit against me. You can't really see the background right now. But Nicholas, so. Before we get started, you want to tell us a little bit about your role at Kaiju? You know, we've gotten to know Ryan a little bit, now through a couple different weeks of having these conversations, but I'm curious exactly, where you fit into this Kaiju story.
Sure. So I've been looking at the videos with Ryan, and you guys have been having a great conversation. So this is really exciting to come in and add a bit of a depth on the technical and AI side here. So I'm the director of artificial intelligence, and so I lead up the team. Typically, my role is going out there and looking for guys and gals to join the team. We typically look for people from varying backgrounds, right? Mathematics, physics, mainly the sciences, computer science. But having a varied background, and sort of I bring these guys together, and I look at my role as giving these guys really complex and exciting problems to work with. And if I can keep their work really exciting, then I think I've done my job. And it's a great place to work here at Kaiju. We're a super fun team and very flat, completely remote, as I think you may know. But we've been doing this for a while, and it's been a blast, and it's really been fun, and we are just a really good set of folks here.
Yeah, I mean, it sounds like you guys are doing some really cool things and using technology that's truly kind of on the forefront of this like new age next wave technology. So it's been a fascinating story to learn more about. Through my conversations with Ryan. So I got to thank you guys for coming on and giving us your time, because like I said at the top of the show, I mean, this has been, AI's like been the biggest story of 2023 on Wall Street, maybe off Wall Street too, maybe just in general, this has been like the biggest storyline of 2023. So to have guys like yourself and Ryan, Nicholas, that have come on this show and give insights has been very helpful. Not just for me, but for the rest of the audience. So I know we got started a little late, so I don't want to take up too much of your time. You sound like a busy guy. Let's get right into it, Nicholas. You're the AI guy, so let's start there. How do you define AI as opposed to other advanced computing that has come before? Like Ryan and I have talked about quantum trading, how that's been around for a while, but how is this AI right now that Kaiju is using? How is that different from some of these technologies that maybe we've already seen in the past?
Sure. So that's a big question. There's a lot to unpack there, and I'm I'm really into this space, and we could spend the rest of the morning talking about this. So I'm probably going to have to restrict myself a bit here. So yes, you're absolutely right. AI has sort of mushroomed in terms of the narrative in the media and the interest recently, and that's been for good reason. We can get into that, but there's been some real progress in the last few years in this space. But AI is not new. That's the first thing. I would probably point back to the 50s, 1950, a paper by Alan Turing, and then a few conferences there where the research community in academia really got into trying to answer the simple question that Alan Turing posed: can machines think? It's where the movie got its name from, The Imitation Game. So he said, can it think like a human or imitate thinking like a human? And so people have been doing this for a long time. In terms of the other advanced computing areas, things like distributed computing, knowledge representation, maybe vision, computational optimization, these are classes of advanced computing that have been developed for decades, and they form the basis of much of what we do in AI. And so I see AI not as something that's just suddenly emerged and sitting out here, but on a long, continuous path of development of all of the technologies that have come before us. Obviously it's fully dependent on computing, but computing is dependent on solid state physics, quantum mechanics, information theory. So it's on a long continuity of progress, and all of these advanced elements of computing that have gone in the decades before are the foundations of what we do. So I really see it as not separate but interdependent, and yeah.
Yeah, I mean, that's incredible. And I mean, right now, I'm sure you've seen this, Nicholas, that a lot of people who maybe have been outside of AI have been trying to use this wave as, to get in on it. You've been around AI for a while. You started an AI consulting company almost a decade ago. How much more capable is AI today? I mean, I'm sure you've seen a lifetime's worth of technological growth in just 10 years. Did you foresee it advancing this quickly?
So what I would say about that is I think a lot of people in research and in this space were quite shocked in the last few years about the amount of perceived progress, especially with generative AI. I think there's been some amount of surprise around that. And we can get into maybe a bit of why that is. So in some sense, there's been real progress and leaps forward in this space. But in other senses, it's just a long progress that's more linear as well, meaning that we get more computational power, more access to data. These are the oil of AI, and AI needs these resources to improve what it does. And so on that aspect, it's just a typical sort of linear, or maybe there's some exponential curve there, because the underlying data and the computational power, Moore's law, seems to be somewhat exponential. So we do see it increasing, but it isn't sort of a step change. So in one way surprising, but in another way just it's on a continuing way forward, if you like. What else can I say around that area? So yeah, I think there's a lot of mixed. There is a lot of mixed feelings now in the industry, especially in research, about what this latest wave of AI really means, and is it getting us closer to general artificial intelligence or not? But that's sort of more philosophical, I would say.
Yeah, so is that what you would say is still lacking in the technology, is kind of this next step toward AGI?
So on that note, I mean, I have my views. As I said, it does seem that the field is split. A lot of people are talking about artificial general intelligence in the next 5 years. Well, people have been saying that or 20, somewhere between 5 and 20 years. And people have been saying that for 70 years. People have been saying, well-known people have been saying we're going to have self-driving cars in the next 2 years. I think Tesla said that in 18, right? And Facebook has said their mission is to build all of the human faculties in the next 5 years. I think they said that sometime around 17 as well. Vision, natural language processing, cognition. It doesn't seem that we're going to solve that in the next couple of years outright. So a lot of people think that we're very close. I am more in the skeptical camp here. I think that although that they are leaps in more linear directions or narrow directions in AI, in particular around the large language models and what they can do, I'm not sure that sort of generalizes to general artificial intelligence. And the other sort of thing that I sort of maybe didn't specifically address early on in your question is, the definition of AI itself. Well, there is no tight definition of AI because there is no tight definition of intelligence outright. We still are learning about how the brain actually does what it does. So there is still a large gap, and there still is a lot of learning. And what I would say is I question the whole sort of field of going into replicating a human in a computer. Like, I wonder the benefit of that. I mean, quite clearly, these techniques are very, very, very powerful in more linear or specialized areas, like finding patterns, for your social media feed, or in network intrusion detection or fraud or things like that. But in terms of like replicating, we've got nearly 8 billion humans on the planet, and I kind of tend to get on quite well with the ones I know. And I wonder the generality of it is trying to get a ghost in the machine. I wonder why. So I'm not convinced about that aspect of it, and I think it's still very far out, if at all.
Yeah, that's interesting. I think that's a perfect, kind of segue into my next question, because you're talking about like, what's really the benefit of putting human intelligence, like we know what humans are good at already. Why are we trying to replicate that instead of focusing on technology, doing things that we're not already good at? But you've been in this industry for a while. What are the ethical limitations of AI investing? Do these machines understand the context of what they are investing in? Will human oversight always be necessary?
Right. So quite a bit to unpack there again. Great questions. Human oversight will always be required. Like, we are not going to, or at least to be responsible, right, and ethical. Like, we're not going to develop these AI autonomous programs, write a blank check and say, go off and trade on the markets. What we are going to do is, so I think you were asking about in terms of responsibility and the ethical applications of AI in investing. So one of the things I observe, right, with people, humans, and investing, is immensely emotional, even without technology and AI. What we do with our money and who we give it to invest, it's a hugely emotional part of our lives, and trust is a huge factor. So if you're going to take on any aspect of that, we have to be, very transparent about what we do, how we do it, where we get the data from, is it biased, and how do we ring fence what we're doing with guardrails and rules. Like, it's not just go off and buy any underlying asset, right? Don't go and put all risk in one asset or one sector. There's diversification, there's risk management. These are hard rules that the AI can't break, and we have to have oversight over that, and we have to be able to explain that to potential investors. So I do think there's a lot to do there. I do think there's a lot to do in education and explaining to people how we do what we do, and that this isn't magic and hocus pocus, and that this is about using the really capable aspects of this type of AI, machine learning and neural nets, to crunch vast amounts of data, which is it's extremely good at, and finding patterns and correlations in that data and leveraging that. I mean, and that's not new. People have always used data to make investment decisions as far back as whenever. The challenge is that as a human being, you can do a handful of those in a day, maybe, right? Where this type of technology can just scale that and look at hundreds, thousands, tens of thousands of data points or underlying assets potentially. And I think that's where the edge comes from in this case. I think in future, maybe there's going to be more generalization and more context, but at the moment, no, computers and AI is not really good at broad context in any way. It's more linear and singular, if you like.
Yeah, and I see AH in the chat's asking a good question. He's saying, "What's the most concerning or surprising thing that you've seen with AI?" I mean, you see a lot of people talking about now, oh, by year so and so, AI could wipe out all human, stuff like this. Like, are some of those concerns legit? Like, what are things, as someone, Nicholas, who's actually been in this space for 10 years, consulted in the space, what are like actual things that you're concerned about versus what are things that you see and you're like, laughing at? I can't believe people are talking about this.
Yeah, I try not to laugh at it because some very serious people and people who have thought deeply about this do have a lot to say about this and existential threats. But I find it a bit odd. I think, for one thing, it's not really clear how those existential threats are going to actually materialize. I think, for one thing, we're really far away from anything that would even come close to that. And as responsible citizens, we tend, or as a race, right, we tend to be very inquisitive, and we intend to find out what the universe is like. And when we find like super destructive technologies, we tend not to use it. Like, nobody has, nuked the earth to complete death, right? And it's very unlikely that we're going to use the power of that technology to do that. I mean, it just doesn't make sense. And likewise with AI, I just see that potentially this is vastly overblown, that we are going to regulate and we are going to be mindful about the potential risks in future, those types of existential threats in future. I do think we have a lot more to be really concerned about now, and even with AI and even before generative AI, right? I think we've all seen about the divisiveness of media, social media, how that plays into all aspects of our lives, and the impacts of mental well-being in younger adults or adults, right? So there are concerns that are here and present and now that we should be talking about more, and we should be thinking about and working on now. But into the future and those existential threats, I think that as we see them emerging in the future, I definitely think that we're not going to sort of just hand the keys over to Skynet.
Right. So I understand, Nicholas, you also mentor students, particularly school leavers. Can you tell us a little bit more about this? How could AI be employed in education to better serve kids?
Yeah, so I've been privileged to do that for some time now. I don't actually have any school leavers at the moment, but that's because we're just changing school years, and so hopefully I'll get that sorted out in the next couple of weeks. I've been doing this for a few years. It kind of happened. Someone asked me to get involved and do that. They thought that I would be a good person to come in and speak to some young adults who were about to leave school, and some had just left. I remember at that age in my life.
So are these people that leave school before they technically finish school?
Some, and some that are finishing secondary education and thinking about what they're doing next, thinking about what they want to do in university. So it's quite varied, the sort of backgrounds that these young adults come from. But mainly speaking, I kind of try to focus on folks who just don't know what to do with their lives, and are sort of thinking about, and they look at me and what I do as being like, my God, I could never do that. Like, that's just way beyond my wildest dreams. I mean, how how would I even start? And I try to break it down and say, no, this is very achievable. This is something that you take in small steps, and and how you would get into this space. But there's a huge need for these types of skills, and they're very varied, right? From, as I said, from scientific background, mathematics, computer science, and it's about applying yourself. And I sort of think about it, or my best advice is to them is, I was very fortunate that I think from about 10, I knew exactly what I wanted to do. I was going to study physics. I was going to find out everything I could about the universe. And I did not know what I was going to do after that. Like, I really didn't know if I was going to continue to be a physicist. I had doubts about that, but I just wanted to know as much about the universe as I could. And so I was fortunate. And I sort of think about anyone in this area of their lives, or this time in their lives. It's like, if you find something that really intrigues you, that you're curious about, and can drive your passion, that helps so much, because that's what drives you forward. I mean, you have to apply yourself at this stage in your life. You have to apply yourself at university. University isn't necessarily about just learning content. It's about learning to learn. And if you can do that and apply yourself as a lifelong learner, you're going to be extremely successful. And I guess that's how I come at it. The angle I come at it from, and
Yeah.
not necessarily being their parent is sometimes helpful, because it's sort of an independent person, not necessarily pushing them in one direction.
Yeah, that makes a lot of sense. Well, Nicholas, we're running up on time here. I do want to give you an opportunity, in 60 seconds or less, to give us a little Kaiju kicker. Typically Ryan gives us some piece of, like, not, I don't want to say investment advice, but some insights from the financial / AI world. Since you're the AI guy, why don't you give us a little bit of insight into, like, maybe how people can use AI in their lives, or just any type of little piece of advice you want to leave us with?
Sure. So yeah, I thought about this. I saw what Ryan was doing, and I'm not going to come from it from the sort of trading or deep investment angle. But what I would say is there's a specific plugin for ChatGPT called Wolfram. Now, Wolfram is an ecosystem of applications that started with Mathematica. I mean, we use Mathematica and back in physics and chemistry, biology, and mathematics to build complex models. For decades, that's been an application that's well known in academia. And that has been extended to Wolfram language. And also there's a finance module that goes to that extends onto financial market data, and able to backtest, or to help you build trading strategies and backtest them. It's still complex, and it takes a lot of effort and learning to get into that whole Wolfram language and applications. However, with the ChatGPT plugin, that's actually, I think, a real game changer, because you can use natural language in ChatGPT to ask questions like, how can I go about starting to build a trading strategy? I'm interested in these underlying assets, and I'm looking at these signals. I'm thinking about these signals. Help me understand that. And then please use Wolfram, the Wolfram plugin, to help me extract some market data on a particular equity, for instance, and help me build some technical signals on that. So I think, even though that this area was still very technical and complex, with ChatGPT, that's actually going to be an emerging way to help develop your skills and think about that and develop ideas, and then using this huge back system of really incredible computational power and backtesting engine. So I see that as something emerging. I've played around it a bit just to come into today, and it's a bit bumpy. It doesn't always work, right now, but I think it's still early. So if you're on the early adopter of this, you might be in a good position in future if you play around and maybe start using this Wolfram plugin.
Yeah, that's interesting. I actually remember, I mean, this site, Wolfram Alpha, I remember it's been around for a while, right, Nicholas? I mean, I remember like 5, maybe even 10 years ago, using it, like being able to ask it questions, and it would give you answers, particularly with math stuff that Google couldn't. And I thought it was like the coolest thing ever. And now that I'm thinking about it, ChatGPT is kind of like the next iteration of Wolfram Alpha. But now you're saying Wolfram Alpha is using ChatGPT. But again, like this site's been around for a while and been able to do some cool things for a while.
Yeah, and it's I think it has been improving over time. And Chat GPT is not very good with numbers, right? It's good with answering language questions, but it isn't very computationally capable. But the whole Wolfram language aspect, that is. So you kind of merge this language, competent language, if you like, with computational capability in the background, and I think that could be a powerful combination.
Got it. Well, Nicholas, it's been great to get to meet you today and to learn more about your role at Kaiju. Hope you have a great rest of your week. Maybe at some point in the future, we got to get you and Ryan on here at some point at the same time. I don't know if this show's ever had that much, brain power on the screen at one time. But Nicholas, enjoy the rest of
that would be cool.
All right, let's do it. All right, Nicholas, enjoy the rest of your Tuesday. We'll chat soon.
Okay, take care.
All right, guys, that was Nicholas Subryan from Kaiju ETFs. Again, they are running the DIP ETF, which is using AI entirely to make the trades. I'm going to bring my main man, Hot Stocks Luke himself, on the show. How you doing, Mr. Luke Choubey?
Doing well, sir. How about yourself?
We might need to get the mic check. Let me go check the mic real quick. I'll be right back. Can you guys hear Luke?
Yep.
You can? You can? This is really interesting. So AH asked us for tell us the juicy.
Why don't you run us the special guest intro? Let me take it away.
Okay, let me just make. I'm not getting your mic through my headphones. No, Easy Mic said no. Let me check it real quick.
Check. There we go. Now we're nice and audible. We got our production team off at the CME today. So producer AB is running around and doing it all.
Doing it all. All right, Mr. Luke. Well, and some help from Carly. Thank you, Carly. Let's run our special guest intro. We are going to be talking to MoneyLion today. Exciting to bring him back on the show. Without further ado, let's run that intro. How you doing, D? Welcome back on Benzinga Live.
Hey guys, how are you?
Doing well. Having a good Tuesday thus far. Happy to have you back on here. For anybody who doesn't know, D. Choubey joining us for I think the 4th or the 5th time now. He is the MoneyLion co-founder and CEO. You're coming fresh a couple weeks off of a strong earnings report. Second quarter adjusted EBITDA profitability. You put up 22% revenue growth on a year-over-year basis. MoneyLion offers both a consumer and an enterprise business. The consumer business is all of your banking, lending, investing, etc. Last time you were on, D, we spent a good chunk of time talking about the consumer business. Mm-hmm. I was hoping today we could kick off with the enterprise business. I think for the average individual investor, it's easier to understand what exactly the consumer business is, a little bit tougher to understand exactly what the enterprise business is. So as we are warming ourselves back up to MoneyLion, would you mind just giving us that lowdown on the enterprise business?
Yeah, no, absolutely. First of all, thanks for having me. Always great to chat with you guys. I've actually loved your last session as well with the Wolfram plugin. I'm going to have to try that out. But look, with the quarter, we were super excited. We had guided to the markets that we do revenue in the range of about $95 to $100 million. We came out with $107 million of revenue. It was a good beat. And to go back to your question, the beat was really driven by what we call our enterprise business. So enterprise, we provide APIs that allow any website. In fact, Benzinga, if they wanted to, offer the viewers that you have on your websites access to digital bank accounts, high yield savings accounts, credit cards, personal loans. You'd inject 5 to 10 lines of code on your website, and voila, you could embed a marketplace. So we power hundreds of marketplaces. We have a 2-sided network. We have about 1,000 publishers. So think about CNBC, Forbes, Fortune, yourselves, others that will inject financial marketplaces into their website. And then we take we do all the heavy lifting from there, where we connect the lead that we capture on your website, and we match them on the demand side. We match them with financial product manufacturers. So who are they? They're lenders, they are banks, they're credit card companies. And that piece of technology is now really scaled, and we offer those capabilities through our consumer products. If you download the MoneyLion app, you can now, in addition to using our bank account, our Instacash product, our investing products, you now have a very personalized access to exactly the right personal loan that fits your profile, exactly the right mortgage that fits your credit score, And that business really started to gel. Last year we had a lot of headwinds in the advertising world, where with rising interest rates and sort of the impact that had on securitization vehicles, we saw a significant lender pullback. We saw that come back in Q2, really on the heels of our ability to expand the asset classes. As you can imagine, high yield savings are really popular. So our both sides of our marketplace really performed well, driving that beat on the top line, and importantly, as well as on the adjusted EBITDA side.
Okay, so let me play this back to you just to make sure I have it, D. Let's say that there is a reader on Benzinga.com. That reader is looking for an auto loan or something along those lines. On Benzinga, without leaving, they can fill out a form, enter some information, and then get loan offers turned back to them, and the user can select one of the offers to continue further down the line with. Does that sound right?
Exactly. And Benzinga, the reason for you to have that is ultimately Benzinga wants to make revenue. They want to monetize the great brand that you have, the content that you have with advertising dollars. This is the story of the internet, right? I mean, this is Google's business. We want to power every financial decision that's made on the internet writ large over the next 5 or 6 years, right? So this is an early beginning proof point that we're able to do that at significant scale.
And D, so I mentioned the 22% revenue growth, the year-over-year basis. You called out the beat versus the forecast you provided. As you think about continuing to grow revenue, what are the parts of the business that have you most excited? Where are you looking? What's the macro story? Give me the lowdown there.
Yeah, so the macro story is twofold, right? So, we are providing access to financial services to the sociable striver, the 90 million Americans that are left out of the high finance world, if you will, right? So the sociable striver can include the teacher, the fireman, the cop, the policeman, the gig worker, people that want to do better on a day-to-day basis, right? So our first-party products, our consumer products, as you know, our leading, award-winning digital bank account. Everyone should have one. There's no reason not to have it. You can round up into crypto, into stocks, into asset management. We do all that self-driving finance work for that consumer. The part of the business that has me really excited is, again, our data strategy, right? So we've seen over 100 million consumer inquiries over our lifetime. We're operating at significant scale. If you look at our total customer base, we added 1.3 million customers in the quarter, and we've significant scale on the consumer side. So what that allows us to do is build on top of those consumers' intentions and preferences. We have transaction data. Our consumers are telling us what they're doing over the weekend, how they're spending, how much they're spending on gas, how much they're spending on tacos, how much they're spending on discretionary spending. And then we're able to build the next generation of interface layers on top of that. So we announced in our earnings call that expect MoneyLion to be launching search, financial product search. There's a lot of conversation around generative AI, LLMs, stable diffusion, all these new technologies. We've been a pioneer of artificial intelligence since we started the business in 2013. We've been doing that on the recommendation side. We've been doing that on the cash flow underwriting side. But now is the time to use the incredible know-how that our team has inside of the company to take it to the next level. So that excites me a lot, because now we can take this massive data set that we have and really put some of those LLM technologies on top of it to make it much more conversational. and to make it really customized and personalized for the consumer. So you can go to Google and say, how do I improve my credit score? It's going to give you a very generic answer that's built for the general population. But if you come to MoneyLion, how do I increase my credit score? If you have your bank accounts linked to us, we can give you a very precise answer in terms of, hey, here are the accounts to close. Here are the trade lines that you have to pay off. And we see that you have money sitting in the third bank account. Use that to pay it off. Would you like us to do it for you? Would you like us to show you? And similarly, we can do that with, what is your safe to save, safe to invest, safe to spend, because we all have to live our lives, right? We don't want to necessarily be living in this kind of, eating broccoli and carrots every day. We actually want to live a very fulfilling life. And with the data that we have, we are the best positioned in the market to go deliver financial product search better than anybody out there, right? And I'll kind of pick on sort of the behemoths out there, the big seven, the big 10. We're in a better position to be able to build financial product search than any one of them. And that's what really gets me excited about how the synergies between consumer and enterprise are working out.
And D, when you say you're in a better position than the mega institutions that are out there, is that because of the breadth of products that you offer, both your owned and operated products plus the third-party products that you plug into, or why do you say you're in the best position in order to seize that market?
I think you got to look at the white truffle here, right? The white truffle is the permissible purpose around the data, right? Consumers are coming to us looking for a financial product. When you're looking for a financial product, you're telling us a little bit more about yourself than you are telling to the social media site. The social media site's doing a lot of work on the background to triangulate your device ID with your geolocation, and they're guessing who you are. We at MoneyLion know exactly who the consumer is. They're telling us they want to buy a car. They're telling us they work at Amazon. They're telling us they make $75,000 a year. Right. And they're giving us a lot more than that as well, because they're linking their bank accounts and saying, hey, I want that money to come into my Capital One or my Chase or my Wells Fargo account. So with that, we can triangulate a lot more about, hey, this is a auto persona. This is a streamer. This person has a 760 FICO score. They want to invest for a goal to not only buy a car, but then a house, and then to get married, and then to send their kids to school. That allows us to then really have a much more holistic and rich conversation with that consumer about not just financial products, but other places where we can provide substitution offers to save them money to meet those goals in a better way.
Okay. And Dia, I want to switch gears a little bit. So we've been talking about the business building side of things, the revenue, the customer side of things. As somebody who follows financial markets, I've seen the story about profitability, right? That's the headline that I've been seeing come out of MoneyLion over the past couple of years, is you're on the pathway to profitability, which is why I think it's huge that you just announced your second quarter of adjusted EBITDA profitability. How do you think about continuing to build technology, continuing to invest in the business in the context of, you've had tremendous growth and now you need to right size the company for profit?
Yeah, look, I think the world has changed, and we talked about this the last time I was on. Is we had 13 years, 15 years of zero interest rates, right? And we're still in that kind of late.
Those were great years too.
Yeah, those are great years. And now we have to live with, for a longer period of time, a environment where cost of capital is quite high. And when cost of capital is quite high, what it tells us is that it's really hard to raise incremental dollars from the market, right? So what the market is saying implicitly is that we have very little appetite for loss-making businesses, right? And if we think about our trajectory, we've looked at going public as a capital to really raise capital to continue investing in this broader thesis that we've had. And now we're in an incredible position where the business equation is working exactly like we had drawn out, right? We'd called to play a year ago, and now we're reaping the benefits of that. And the issue with the public markets is when you're building publicly, it's a lot of that early innings, the warts, the synergies, they all play out publicly. So, we expanded by acquiring a couple of companies. Those always have growing pains, right? But those growing pains played out, right? We acquired a company, and then we were hit with a drawdown in sort of the advertising demand. And then we had to basically build through that. And we had to accelerate the synergies faster, right? So if you think about where our business is now, we are categorically in a position to generate free cash flow. If you look at our cash position last quarter and this quarter, it's exactly the same, despite us actually having paid down debt and paid a dividend to some of the old holders of the company that we bought, right? So what that tells me is that we actually generated positive cash this quarter. The big rub was, investors would say, hey, look, at least from the outside in, you guys are going to run out of money. The inflection point that was so magnificent this quarter was this team proved that not only can we continue to grow in a tough environment, we're highly diversified, and now we've got the operating leverage in the model that allows us to generate free cash flow on a consistent basis. And that should be exciting for investors. And if you take that from a financial perspective and then look at the data assets that MoneyLion has, our ability to continue innovating on the use of artificial intelligence, automation, that's going to only continue increasing the margin profile of the business over the next year.
Awesome. I'll end it on a fun one.
Yeah.
Do you remember how you and I first met a number of years ago?
I think it was at a conference.
Yes, it was at Bitcoin Miami in its heyday. Peak COVID. We all should have gotten COVID, but we didn't. 20,000 person event.
Not that we at least didn't know about it at the time.
Yeah, exactly. I saw somebody walking around with the shirt that said MoneyLion. I went up to you and I said, "Oh, do you work at MoneyLion?" You're like, "Yeah, I do." Turns out you're the co-founder, CEO. Introduced myself and Benzinga, and we had a nice little chat. So
awesome.
It's been great to stay in touch with the story.
Awesome. Thanks, guys. Thanks for having me.
Absolutely. Thanks for joining, D.
Thank
Talk
you.
soon.
Alrighty, that was D. Choubey, the CEO and co-founder of MoneyLion, ticker ML. Check it out if you want to learn more. I see my guys Mitch and Chris hanging out backstage. I'm gonna go ahead and bring them on for a second. Turn it over to you guys. We're gonna do some fun celebration of 200,000 subscribers. Shout out all the subscribers on YouTube. Smash the like and subscribe if you have not already. Be part of that 200K. How y'all doing?
What's going on, guys? Happy to be joining Benzinga live, of course. It's a Chris Ketchy and Money Mitch takeover. You guys know we don't hold back. How we doing, Chris?
Doing good. Back together again. Hey, shout out Easy Mike in the chat and everyone else watching. And as you said, Mitch, 200,000 subscribers. I mean, I remember a year ago, when we were pushing for that 100K milestone, we hit it. And now here we are at 200,000. So yeah, shout out to all our subscribers, our loyal fans, and to everyone on the video team for continuing to build this great Benzinga network.
Definitely, I gotta say it, right? The big thank you, right? Because that's really what it's all about, guys. If it wasn't for you guys out there, we wouldn't be here, right where we are right now, guys. So, I want you guys to definitely get thanked for that. And I think that, it's very important. We wouldn't be here really if it wasn't for you guys. And we want to go ahead and give you guys the thank you for reaching that 200,000. And we're going to keep pushing forward. Looks like we want some joining back in. Luke wants some action in this.
Mitch, Chris, congratulations. I know that there's other personalities that are a part of this, but you guys are the lifeblood of the individual investor. You feel it through and through. Every day, your mind is on investing. It's on markets. You are out there investing yourselves. You're putting yourselves on the line. So we appreciate the content you deliver. We're here to make a change, and we couldn't do it without you guys and the whole Benzinga team. And of course, viewers, we're doing this for you. We don't do it just because it's fun. It is fun. Maybe we would do it if we had no viewership, but we do it for you all. So keep in mind, we want to build this channel together. If there's content that you want, if there's interviews you want to see, there's segments, there's deep dives that you want out of us, we listen. You may think your comments float by. deaf ears. They're not seen. We see every single one of them. We read every single one of them. We're doing it for a reason. We want to build this together. We made it through the GameStop years together. We made it through the crypto years together. We're into this next chapter. We're into this new interest rate environment. We're only going to win if we seriously do it together. So I appreciate each and every one of you for tuning in every day and being a part of the community.
That's what it's all about, right? At the end of the day, we're trying to give back to you guys, right? It's our way of paying it forward for all the new traders out there. And I think that one of the things that we always want to do is what? Level the playing field for you guys out there. That's what Benzinga was started for in the first place. It was to get you guys access to the value that retail traders need to go ahead and make trading investment decisions, right? At the end of the day, we can't tell you what decisions to make, but we can definitely point to every catalyst there is in the market, bring you guys exclusive interviews, whether that be experts, whether that be big CEOs, whether that be the next company that could be giving you guys those thousands returns, right? That's what we're here for at Benzinga. So I wanted to also start bringing in some clips to show you guys the value that we give back. So we're going to go ahead and get into that. But first, I wanted to go also and talk about the journey that we have taken each, and we've joined in this, right? I started coming in the YouTube channel when we were just at 13,000 subscribers. Look where we're at today. And that's just in 3 years, team. So where I expect us going to, of course, that million mark, but we're going to be able to do it just with you guys out there, continuing to support us and push into that next level. I know I joined in 2020, and then Chris joined the content just slightly after that, when we started really kind of getting into more of the SPACs attack. And got to always thank my brother Chris, because he always keeps me up to all the latest trends. So Chris, when did you join in the journey?
Yeah, so I actually just celebrated my 3-year anniversary with Benzinga last week. I started in 2020 as well, just like Mitch. And shortly after joining Mitch, I mean, it was that fall of 2020 when you and I kind of had, that idea, and you pushed me and you were like, hey, we should do a show about SPACs. SPACs are hot right now. Everyone wants to know, about the deals that are being announced every day. And sure enough, we launched SPACs Attack, and we were able to gain a bunch of subscribers through that, do a bunch of interviews with CEOs. And then, I also launched an NFT show, the Roadmap, and also contributed to crypto content and hop on other shows from time to time. But yeah, exciting journey in the video teams.
Yeah, I always say Chris is one of those people that definitely keeps up with the latest trends. So if you guys aren't following my man Chris, definitely give him a nice follow on Twitter. He really kills it. A lot of the times he's one of the people that I look for if I do start seeing any trend, to just give him a question. So if you guys ever get to the point where you guys are seeing some trends and you want to talk about them, or maybe have Chris look deeper into them, definitely reach out to @ChrisKetchy. He'll definitely do a deep dive. He's one of our best journalists, and we'll always look into new trends to help you guys understand them, because that's really what we're here for. All right, guys, let's get into these clips. I wanted to shows us a little bit of value and why we're here, right? What have we done for you guys, right? Because there's one thing just us talking about it. There's another thing us showing you guys exactly what we're going to continue to do moving forward and what we've already done. So let's take a look at some of these highlight moments in Benzinga's history. Some of these are older than others, and we'll definitely mention that. But the idea here is to show you guys the value we give back to you guys. So the first one I'm going to bring on here, this is Chris. Chris, tell us a little bit about who am I seeing here? What is this about?
Yeah, so you are seeing on the screen, this is Cristiano Amon. He is the CEO of Qualcomm Corporation. That's QCOM. We had the privilege to go interview him in person in New York in September of last year. This was part of Qualcomm's Automotive Day. And Mitch, I mean, this is really special for several reasons. First, it was one of the biggest CEOs we've ever interviewed in company history. This is a $125 billion company. It is a top 100 company in the world in market cap among public traded companies. And also, I mean, Mitch, you saw it, that room that we sat in with the credentialed media guest, right? We were in the same room as CNBC, Yahoo Finance, some of these companies that have been around longer than Benzinga. They may have more followers, more subscribers, more readership, but we were there in that room. And we were one of only 2 or 3 companies that got a video interview with Cristiano Amon. Many of these companies, and writers for various magazines and websites, they got interviews with other executives at Qualcomm, right? Maybe they didn't get to talk to Mr. Amon. We did. We were there. And I just think that shows kind of how far Benzinga has come and also what we're capable of in the future, right? We're going to reach out to more of those top 100 companies. We're going to land interviews with those top companies that our viewers want to hear from.
You know it, man. Let's just check out a little bit of a clip from it. And of course, we're not going to show you the whole interview, but I did want to give you guys access to the interview. So you guys will see links thrown out throughout the clips. These are just links. So if you want to check out these interviews on yourself, by the time we get out of here, I'd definitely come back and check these out, right? Even though they're a little bit older, I'll tell you one thing. It'll definitely show you the value we have to offer.
Across the entire Galaxy family in all markets, but it's a multi-year agreement. And it speaks to the validation of our strategy in mobile to really focus on the share of wallet, the premium and high tier, focus on driving an innovation roadmap, and that resonate well with Samsung.
So outside of Samsung and some of these other publicly announced partners, you do work with other companies behind the scenes. How can investors get a sense of maybe some partners that haven't been publicly disclosed?
See, one unique thing about our company, Qualcomm build ecosystems, and that's actually was part of the presentation today on the Auto Investor Day. We build ecosystems. If you look at what we've done in mobile, we provide a truly open horizontal platform in mobile, working with everybody on the ecosystem, from operators to infrastructure vendors to all device manufacturers.
And that's really what it's all about, right? I think that, one thing that was certain is I can even tell you guys, I was there in New York City when this was going on, and I was nervous for Chris interviewing Cristiano. And I think that the big thing there was it was such a big opportunity for us, right? We're not talking about a little company here. We're talking about a massive company, one of the leading companies in the world. So it was definitely a great opportunity for Benzinga to not only get the interview, but get invited out there to New York, and definitely doing it in person was definitely that much better.
And Mitch, I know you're proud. Look at that suit game. I had my suit.
Yeah, man, you were looking
interview,
good, baby.
So...
hey, I can say it's always good to see my man Chris also in person. We always talk about it when Chris, Ketchy, and I get together. The adventures continue. So I see you guys talking a lot about the SPAC attack days in the chat. So it's always good to hear that. All right, let's go to the next one here. We're going to talk about, of course, one of the biggest moments in Benzinga's history was when we brought on, of course, none other than Andrew Left during the kind of the saga with GameStop. This is when he actually announced the short, right? I mean, this started getting everybody going crazy. You guys were seeing it. AB was already a part of it. The chat was there, and I still see Bill in the chat right now. And that's what it's all about, guys. I love all you loyal listeners that definitely tune in. Let's take a little look at what happened here.
Background than Jason and I mean, you've got the cool art. We're sort of basic over here. Jason just has a white wall. So,
there's the BZ. There's the BZ.
There
Never too far.
My kid made me that. Okay, sorry. All right.
Oh,
What's
okay,
up,
that's
Andrew
nice.
Left? Hey, everybody. How you doing? I'm great, thank you. Can you hear me just fine?
All right, so I'm gonna fast forward a little bit here.
Months, like,
so then he starts talking about GameStop and how he's announcing his short position and why, right? I think that's the important thing here. And this is really what created a massive move, right? This is when they said that the short sellers started to get squeezed. And it happened right here on Benzinga. It wasn't on the other medias. It was right here. And I think that that's the opportunity that you guys have versus anywhere else. is that we're always going to continue working to get these exclusive moments, these moments that actually could change the whole financial industry. And this actually did. I mean, there was definitely some shorts that got some squeeze on them. And even Andrew left from this moment was not the same, right? Let's just be honest. And I think that, you know, for better or for worse, that's what it's all about, because we're going to bring it to you. And that's what Benzinga is about. Whether, you know, it's a giant, you know, win or a giant loss, regardless, we're going to bring it to you guys and give you guys the value that you're looking for.
Yeah, Mitch. I mean, this was, you talk about wanting to be in the room where it happened. This was, right? As you said, Benzinga was, I mean, a huge catalyst for this event, right? We were able to get Andrew Left on. He announced his short position. And Mitch, I've been a part of a lot of Benzinga shows. I've been in the chat either as a viewer or as a host. I have never seen a chat go so wild.
It was
Once
wild.
he announced that short position, the comments were flying. People were bashing this guy. We had to slow down the chat. I think that's the first time we ever had to like slow down the chat. We had to get more moderators to come in to help out. And it was crazy. And like you said, Left has not been the same. He actually stopped doing short reports for a while after the GameStop saga. And I mean, I'm excited. Later this year, we actually have a movie called Dumb Money coming out, hitting theaters. That's going to cover the GameStop, you know, storyline, and it's got some big actors in it. And you know, as a team member of Benzinga, Mitch, I always like to know that, you know, I was there. I watched this happen in real time, and it's crazy to me still to think about having Andrew Left on talking to Luke and Raz. Crazy.
Yeah, a little bit later, I think he came back, and I was on live, and I had to like be like, "Oh, Andrew, I'm gonna talk to you for a little bit," but I'm just like running to try to get Luke and Jason back on, and it was something else, guys, and that's what it's all about here at Benzinga. That's what we want to do. We want to continue giving you guys the value back. We're going to show you one more clip here. But like always, there's so many moments, and we'll talk a little bit about maybe some of our other favorite ones. You guys in the chat, keep throwing up your favorite Benzinga moments. I'm seeing them thrown in right now. That's what it's all about here too. This is a celebration, guys, and I wanted to take some time out of my day to celebrate with you guys. Chris did also. So definitely everybody tuned in and everybody that subscribed to Benzinga, this is a big thank you to you guys. All right, let's go to the third one here. This is an interesting one also. This one was definitely got us going. This was even before that moment. I don't know if you guys remember this one, but this was an impressive one. This is when we first had Kathy Wood on the Raz Report, and this was a really big question that got everything stirred up in the interview. Let's take a look.
Like used to it. So we're going to transition to something. I'm going to show a clip from a show, you guys, Jim Cramer. I'm going to show this clip real quick.
Jim Cramer? I think I know him.
Respond to it.
I've heard of him.
Close your fund. Close it. Listen to what the late Jack Bogle would say. Close it. Concentrate on performance, not on trying to deploy capital. It's okay. It's no sin.
Okay. Now I should just shut up and let you take over your response.
Well, he's talking about the ETFs. It is not possible to close an ETF. It's just not possible. So I think he's referring to the mutual fund industry, and that's not what we are. But I think the other mistake that that commentators are making is that they don't understand that I have nothing to do with the flows. In other words, the ETF ecosystem outside of ARC, the market makers, the authorized participants, they are creating and redeeming baskets of stock, which are the stocks we're invested in. But I'm not having to invest those flows or raise money to satisfy redemptions at all. I am investing, pure and simple. I am making investment decisions. I am not dealing with flows. This is such a luxury in a volatile market to be able to focus only on the investing side and not to be forced to do anything because of flows one way or the other. And from that point of view, I think ETFs are a superior wrapper for the portfolio manager.
All right. And I can tell if you guys are like me, even hearing that interview now still gets me to want to listen to it again. And I think that that's the important part. So I'll give you guys the link to this one if you guys want to check it out. And of course, we have even better news, right? Well, guess what, guys? We got this massive interview. And guess what? We got you guys a little reward, right? 200,000 subscribers. What not better than to go back to Kathy Wood? And yes, we will be having Kathy Wood on tomorrow, team. So I don't want you guys to miss that out. That's going to be, of course, coming out at 2 p.m. And of course, it'll be on the Raz Report with Jason Raznick. And I've already taken a little sneak peek at the interview. I'll let you guys know there's some great stuff in that interview. You don't want to miss that. Stick around, team. It's going to be awesome, of course, like always. We'll see what happens. But it's been a good time for sure. And like always, you guys don't want to miss that. That's 2 p.m. tomorrow. Let's talk about the last kind of favorite moments that we have, Chris. Any that you want to bring up to mind?
Yeah, I mean, I still think, the Qualcomm interview, my favorite, that GameStop saga, again, just so important. Other favorites of mine that stand out, after the GameStop saga started, right, we had the day where brokerages started halting trading of GME and AMC and other stocks. We did an all-day stream, Mitch. I know you remember. You were there longer than I was, but throughout the day, we all just kind of shifted coverage, hopped on, hopped off. We had all kinds of guests, right? But what really stood out to me, we had Dave Portnoy come on at night talking about, retail traders. But the biggest thing was we had the CEO of Webull come on, right? And he talked about what went into the halts. Why couldn't people trade the stock on Webull, right? And he discussed the decision making, and also he came on the show and announced that they had opened trading back up before anyone else knew that information. So, I mean, again, we were in that conversation. We were so important in that saga that played out. I also liked the 2020 election stream that we did right at night. Mitch, you were there. Dennis Dick hopped on right at night. We had all kinds of people.
Look at those young. Look at those young guys.
There's Sam, Steve and Spencer. Yeah, I mean, we were able to talk about some different stocks, some different sectors to watch, right, depending on who won. I recently got to interview Jason Robbins, the CEO of DraftKings. I mean, Mitch, DraftKings is a company that you and I have talked about for years, the sports betting industry. So I'm happy that I was able to talk to Jason. Look at him right there. And then also a shout out, DWAC, the Trump SPAC. I remember when that deal was announced. Live trading, I actually hopped on with Spencer, Ryan, and Z. I think Mitch was on vacation. He missed out on all the fun that day, but Spencer bought DWAC live on the show that day. I remember that, and just, crazy times. So those are some of my favorites, Mitch. How about you?
Yeah, I have so many, man. I could go to so many of these, and that's the fun part. That's really what I could say, is that there isn't a limit on favorite moments. But if I have to put a couple, of course, there was a massive interview on SPAC's attack. It was our first interview of Gary Vee and Matt Higgins together. Chris and I were talking all about kind of the NFTs and how they were coming into game. And that interview was massive. It was right in the early start. And we got a lot of insights from that interview. And I know Chris and I, after that interview, we were like, no, this is not even like a small little bit of a trend here. We got a big opportunity. And Chris went big. He went so big that he opened a show on it, right? I mean, that was, I think a lot of that came from that interview. And I think that a lot of that push also came from the industry and being early to trends versus being late. That's what we want to do at Benzinga. I remember my interview in New York City when you were doing your Qualcomm. We had a fun time. We went to Central Park and did an interview right there in Central Park. That's really fun, guys. Moments like this is what it's all about. I had to rock the the red tie here, my little Republican look here. But yeah, I had some fun. And I definitely had a good time in Central Park. And we're going to keep doing exclusive moments like this for you guys, right? And we're going to keep doing bigger and bigger things. I know that for 2023, we did an interview that had 8 experts. Joel Elconin helped me with that. And man, we killed it. We talked to so many big experts that gave really good outlooks into 23 before that massive run. Right. And I still remember one of our biggest moments when Chris and I were on SPAC's Attack and we were talking about CCIV. We were talking about how maybe the rumors out there for DirecTV just probably weren't true, and that another major company could get, bought by this acquisition company. And then it turned out to be what? Lucid, of course. And Lucid just went to the moon. Right. And that was right there on SPAC's Attack. You guys had an amazing opportunity to get that at $10 versus I think it was even under when they were mentioning that DirecTV deal. And we were like, man, you could get your money back on this deal if you wanted to. So that was the important part. Moments like that is what Chris and I are really all about, because that's not going to necessarily put us forward, but it could definitely put you guys forward. And that's what we're all about here.
Yeah, Mitch, shares had actually dropped on that DirecTV rumor, and you were like, nah, hold up. They're not gonna take DirecTV. Yeah. Nobody wants DirecTV. Why would they do that?
Yeah, and the truth is that it turned out to be true, right? And I think that the only thing we can do a lot of the times is wave flags, right? For you guys to go ahead and do the research yourselves and look into it, make your investment decisions, right? That's not what we're here for. But if we can just help you get towards that learning curve, learn and understand the market so that you can make your own choices, that's what it's all about here at Benzinga. Leveling the playing field, of course, and we're going to keep going forward. We got a lot more for you guys. We got Kathy Wood tomorrow. Don't miss that. We're going to keep going. We got a big AI event coming up. We got more cannabis events, of course, coming from you from Chicago. The next one, we got a future of digital assets coming to you guys, and we want to let you guys know a little bit more about that. So stick around for that. I'll definitely be bringing more and more on right here on our live streams about that event. And then what else will we do? We'll be increasing the quality. Right now, I'm working on a rebrand of Start Swing Trade. There will definitely be a step up, and you guys will see the continued quality come in. And of course, you guys always give us feedback. That's what it's all about. That's why Chris and I are still here. That's why we're going to continue pushing the envelope. And if you guys want to reach out to us and send us any feedback, or just give us a thank you, or let us know why you guys came to Benzinga, reach out to us, shows@benzinga.com. This actually goes to all of us, right? And so it's not just to Chris and I, it goes to everybody that's on the show's team. If you want to give them a shout out, if you want to show them some appreciation, or just give us some feedback, reach out to that email and we'll definitely bring better things to Benzinga. Hope you guys enjoy us taking some time to celebrate our 200,000 subscribers. Chris, thank you for taking some time out of your day.
Of course.
And we're looking forward to some more Chris Ketchy on video.
I know I gotta come back to video. I haven't been doing enough. I've been so busy writing, but I mean, Mitch, this is fun. I always love hopping on with you. I did, a virtual event recently where I got to talk to AB real quick. I got to talk to Zunaid real quick. Yeah, I mean, I miss all you guys. And like you said, we're building up, right? Virtual events, right? We're doing virtual events every week or two. And we're covering specific sectors. I really like that, Mitch, right? We did a sports betting one where we covered a bunch of sports betting companies. We did an AI one where we covered a bunch of AI names. We're doing cybersecurity in the future. We've got crypto in the future. We've got an AI event coming up, like Mitch said. And yeah, you'll see me at Future Digital Assets in New York City on November 14th. I'm super excited about that. Second year of doing this event, and we've got some big speakers and more coming. So exciting times ahead for Benzinga for sure.
Definitely smash the like if you guys enjoyed us taking some time. And of course, we'll let you keep going. Up next, you guys will have a little break, and then I'll be back on Start Swing Trade at 3:30. Don't miss that, guys. Smash the like. It's always good to be with you, Chris. And we'll be back and keep pushing forward. Thank you once again, our 200,000 subscribers. Like always, we couldn't have done it without you guys. See you next time right here. Of course, Benzinga.
See ya.